Thank you, Kathy. Greatly appreciated. Probably butchered your name, but thank you very much. Welcome everyone to the Kendall Report. Well, it's amazing that it's working. There might be a little echo in this room because all the soundproofing came out of the studio today. So if it sounds like I'm in a closet, I apologize. I hear a little echo myself. So we'll have to put up with this for the next several days. We made great progress on the rebuilding the studio and the new trading desk and all that. So pretty exciting stuff, but it's very disruptive here. So anyway, so let's get into tonight's video. I guess the headline here is, can earnings actually lift the markets this week? It's interesting because, I don't know what's going to get us out of this trading range. It's just absolutely horrific. Last several days, 4,100, 4,160, back and forth. There's still some moderate downside risks that I'll cover here in a few minutes, but man, it's just flat. And I guess if you're a trader, this is the best markets because you don't have any fears of it breaking outside of the range, so you can play the outside of the range. But about the time you figure that out, they break it out, and so just make sure you keep things pretty tight if you're playing that kind of game. Anyway, yeah, so let's take a look real quick here. Let's go through the economics. There's really no agenda that I could come up with this week. Typically on Sunday night, I have an agenda for the week, but I think earnings is about it. Retail sales, there's a bunch of stuff. So let's go through the economics. That'll bring us into a little more, I guess, perspective possibly. So on Monday, we have Empire State Manufacturing, not a big report, but -5, looking for that. On Tuesday, we got retail sales a plus 0.5, and then we have industrial production expected to be absolutely flat, not up or down, and then capacity utilization at 79.6. Every time I look at that number, I have to tell you, it flashes me back to one of my mentors back in the 80s, and he used to say, when you get up at 79.82, that's about as good as it gets. And so you're not going to ever see it at 100%. So the capacity utilization is running really high. So, it goes to the the lack of recessionary ideas that are out there, or proof that it's out there. On Wednesday, we get housing starts. So this is maybe something here, 1.42 million new starts on permits, 1.44. So they're showing that trying to increase the permits numbers a little bit. I've been talking about, I'll just kind of put some things in here as far as a perspective. We've been getting kind of a turnaround in residential real estate. That's pretty much starting to turn, maybe flatten is a better word. It's not like there's anything very robust that's going on, but it isn't going down more. How's that? So on Thursday, we get claims, 262. That's been increasing a little bit. Folks have been pointing to that as some weakness in the labor markets, maybe. Continuing claims, 1.813. Only number, and this has been a number for me for probably 6 months or more, is a number of greater than 2 million. Then it would wake me up a little bit. Friday, existing home sales, looking at 4.33 million, and last month 4.44 million, so a slight downtick in existing home sales. We'll see how that comes out. LEI, leading economic indicators. I remember back in the day that used to be a really big report everybody paid attention to. but no one really cares anymore, minus 0.6 on that number. So let's talk a little bit here about some other things. Let's go through the earnings. We have 787 earnings coming out this week. Monday, there's 409, mostly oils for the most part. There's a lot of fairly big oil companies. We've got Exxon and ConocoPhillips, I believe, coming out. There's a bunch of others coming out. So oil is going to be the focus on Monday. Tuesday, we got Home Depot. That was it. There's 165, 97 on Wednesday. We get lots of retailers, smaller retailers coming out. Thursday, we get Walmart. And then Friday, there's 23 coming out. They weren't even worth mentioning. So that adds up to about 787. So nothing there. So I'm still searching for that jewel to figure out what's going to move the markets this week. And like I said, there's just nothing out there as far as trying to put your finger on something that's going to break us out of this pattern. I would only tell you that about the only thing that could happen, it may be some news over this debt ceiling. No, that's not going to work. No one really cares. It's funny because even no one actually cares in Congress either. They're going, yeah, this is a really big deal. Janet Yellen's running around talking about the catastrophe it's going to be if we don't get a debt ceiling increase. It's going to be catastrophic, right? Meanwhile, they're going, it's pretty big, but how about Tuesday? Do you have time to meet? That's it's like this casual, yeah, we can make it over there on Tuesday. We'll see what we can do. It's not as urgent as they want to think. And there's something else. I believe that the CBO has scored this whole situation, and there are corporate tax revenues coming in on June 15th. And those numbers, that will carry us through probably July, maybe even into August. So they're playing this little game like, the chicken game where we're getting really close to this catastrophic event, and we're really not there. So it's, once again, it's just all hyperbole. They're just making up stuff as things go. And it's unfortunate. But like I said, I can't come up with any particular reason that I could really point and say, wow, this is going to be the thing that we're looking at. Friday, I hope you folks appreciated and enjoyed the live stream I did on Friday. We kind of fell into basically a live trading session is what we ended up with. I think a lot of folks enjoyed it. If you did, I would say this: if you would like to see more content about that, make sure like that. Just let me know that you would like to do that. It was a great illustration. Matter of fact, made the algos called a great call, about a 30+ handle move off the lows, and we walked right through the whole thought process right into the close. So that was kind of fun. I enjoyed that. So we're also, you'll see here in a minute, algos were just a little bit ago were showing us that it looks like we're going to start to rally off the lows about a half hour, 40 minutes ago on the 5-minute chart, and the hourly was turning up. So I'll talk about all that here in a minute. But I think I had a lot of fun doing it. And one of the things I'm hoping to do as we go forward, there is going to be the entire rebuild of what's going on here is pretty significant from the standpoint of reconsidering all kinds of content and other things to do to make this channel much better than what it's been. I enjoy these live streams. I'm just not sure what's going to end up coming out of the month of May. It won't be sell and go away. I will still be here. It's just at what level and how we're going to reconstruct everything. There's a lot of things going on with me right now. So I would just leave it at that. So let's go ahead. Let's get into the database. I think that was fairly interesting, pretty much as expected. I talked about the other night. And one more thing before I get going. Because of what's going on in this room right now, the reconstruction, the plan, the hope is that after Wednesday night stream on Thursday, we're rebuilding the whole desk and the studio area and all that, that on Thursday I can get everything set up and I'll be able to do a stream on Thursday night. If it's possible, I'm just warning, I'll let you know as this project comes together. There's several potential hiccups that can happen during the week, but the expectation is everything will get done on a timely basis, because next weekend is a complete tear down and rebuild of everything, electronically, computer setups, everything. So it's a big deal what's coming about. If you've ever taken a pretty sizable operation and rebuilt it, the unwinding the wires and rewinding them is a lot of work. So let's go ahead, and I just want to give you guys that head up so you know what's coming. All right, let's get into the Wavetech database. All right, we'll start off with the short-term database. It's at 50.16. So we did see a little bit of selling after Friday's action. 775 sells for Monday's opening, 224 buys. Database is at 50.16 bullish right now, down just a little tick from where we were on Thursday. And the weekly, though, is at 6105. Let me move over to that database just so you can see what's going on there. And my expectation, we were up around 65%. We did see some selling. I expected that with these choppy patterns that we're seeing around. So that is likely to continue to just stay somewhat on the downside here. We got up to around 65. I wouldn't be surprised to see us drop down maybe this week again if we don't get any kind of robust movement. The sideways movement is burning off some of this upward momentum, but nothing material enough to cause a change in the forward-looking outlook as far as what's expected. I will go full screen here just so you can see it. Sorry, I should have already been there. But let's take, if I go over to the All Stats page here in Wavetech, what we're looking at here is the right now on the short term. Right now, the average days that these models hold on the dailies, when I show you that every day, is 39 days. Right now, current duration is only 7. So we're looking forward on those the 50% of those symbols that are long. We're looking at around roughly about 7,500, 8,000 symbols looking forward here. We're looking at the potential for it to move forward for probably another 30 days. And these are trading days, so that's the better part of a month. You get that's about 5 weeks around that time. On the intermediate, though, this is what's really important here. What we're seeing here is the average days long. This is the optimized weekly. So this is the best of models for every symbol in our database on all of them right now. And that is putting us at the, right now, the looking forward, the average current duration is 51 and 205. So we've got roughly 150. We never get to 100%. So we're probably looking at going forward around 100 to 120 days looking forward, which is the better part of 6 months, just so you know that. So that is a big thing there, as it turns out. So we'll just leave those expectations going there. These are really good numbers from the standpoint of what's going on here with the database. These are really solid trend numbers, but it's really about the individual stocks. I've talked about this before. You really do not, there's more to the markets than some indexes, right? So, especially weighted indexes. And when we look at NASDAQ, it's heavily weighted at the large cap level. All of them are actually. Everything's top weighted for the most part. And so the point is that there's a lot of other symbols that are working And there's some really good trades out there. If you have Wavetech, you'll know that. But most of this stuff is just kind of flat and drifting higher. There's not any lot of robust trends out there. There's some that are developing, but for the most part, it's just, I call it a creepy crawler, where the market's just, it's going forward, but it's not accelerating. We're getting any kind of parabolic curve or any kind of situation like that. It's just a nice angle of attack, nice and easy, and it can keep going like this for a while. And as I just said, the forward-looking database on the intermediate is actually looking at probably the better part of 6 months of an upward bias. That could mean that we're going on the S&P, we're going to 4,400 or 46, or it can mean we're going from 4,100 to 4,300. It could be a very flat, very gradual, but some of these stocks underneath are going to do reasonably well. Bear with me 1 second, folks. Sorry about that, a little bit of a glitch. So here was what I was talking about. Go back all the way to Friday, and those of you that were watching the live stream on Friday, you'll see that we got that turnaround in that last 2 hours. And matter of fact, the market rallied all the way up to, I think it got up to let me just get the number, to 38.50. And when we were down here and this pattern started to turn around, the 5-minute, the 1 minute, and the hourly were all telling us that we should get a bounce, and there was some targets there. The original target was 24 to around 28, and then it became clear that we were possibly going to as high as a 36 plus handle, 34 plus, and we went to 38. So that was a fun situation. I like I said, I enjoyed that. But what we're looking at now, and these numbers started to come out as we came in toward the end of the close on Friday. And as we open tonight, we got some fib targets on the upside here, which are interesting. We've got right now the fib target 1, 41.54, 41.71, and 41.81. So there is some upside, but this is the same targets that we've seen before. And you can go back even to last week. If you look at some of the numbers that came out last week, we got an RTX sell signal over here on the right-hand side. Let me just draw this in because these are important to watch for. So right here is the RTX sell signal. And what that means, for if you're new to the channel, is that we closed outside of the Wavetech market grid, which is this own orange line here. When that happens, you usually get 1 to 2 bars. You get 1 to 2 bars of sideways to down. We definitely got the down, and then we continued to drift down into this pattern. And so that was, and then we got an RTX buy over here, which is the inverse, and we got bars up in this pattern. And we actually had another one here the other day where we got this upward pattern that I was just talking about and that I covered real time in the live stream on Friday. But the patterns that are set up here are suggesting right now that this upward pattern here, that we should come in to here. And if we drew, I'm just going to draw a line across here. It's the same old, but we're at least targeting into that upward pattern there. Like I said, 41.54, 41.71. And as always, this little peak in the momentum is coming in right around the London Open tonight, that hour before and hour after the London Open. So there's a basically this 2 hour to 3 hour pattern that sets up every night around London. It makes sense because they will proxy a lot. You got the spread bettors, you got a different kind of configuration in London, and then folks will use the E-minis as a proxy to trade the open, the FTSE, and everything else that's going. And so you see some interesting movements sometimes when you're watching that around that time, if you're around. Like I said, I'm always envious of the London folks because that's your morning, so it's really nice if you want to trade the U.S. futures. There's a lot of opportunity around that windows. And it's interesting, the London Open and then the U.S. Open has similar characteristics a lot of times. Reversals, they'll trade into the pattern up or down on London. They do the opposite, basically 8 hours later into the U.S. Open. So watch those places there because there's a lot of opportunities and right at that level at that time. So hourly chart looks like we got some bias. In fact, if I look at what the expectations are for the pattern here, PPM1 is still looking like it's going. You can see the projected SMA is showing that we're going to cross over all these averages. We'll see what happens. The absolute worst case is we should trade along that 10-period moving average right now, simple 10, and that number right now is at 41.28, and it's rising as we go through around 32, 34. So look for those targets in that pattern there. We'll go to the daily next. It's interesting because we've been talking about this for multiple days, and like I said, it's very, very not discouraging. I'm not sure what the right word is, but it's just such a flat market. If I blow this up here, I will. You can see if you look at the closes, I mean, for the last 5 or 6 days, we've been in this range, and you can go back weeks, and I just put a cursor here along the line. You're down the middle. You've just been oscillating around 41.30, maybe printing down into 40 handle, up in the upper 41 handle, and it's just been stuck there going back all the way into April. So it's not been a lot of fun. We'll call it halftime of the month right now. So we're at a point where maybe we can get some movement. And this is how the configuration is. So the Wavetech Fibonacci indicators have both up and down indications. So this is just a trendless type situation. The PPMs are giving us 0 clues on market direction here to speak of. There's a slight bias to the upside, but so slight. On the daily, it's minimal, and in a couple of days, that can all go away. The good or bad news is that we really don't have any news coming out this week that's going to be earth-shaking. There's no earnings, there's no economic stuff, so it's going to be a market sentiment, whatever the heck that is. I don't know if it's bullish or bearish. You folks can figure it out. Maybe make some comments in the video, but I'm just telling you, it's just. This is a flat line, man. This patient's almost dead, it feels like. And I'm not sure what's going to revive it. Like I said, I can't find anything. We'll just keep looking every week and walking forward the best we can. And I wish there was more to say. It is what it is. So maybe I'll try not to string it out too long, but let's go. Since it's Sunday night, let's take a look at the, let me do the market grid real quick here for you, real quick. And it should be a little bigger now on the far right-hand side. I want to use the trading view numbers. So we'll look here right now. The S1 is 41.25, S2 64. So my expectations just based on that hourly chart. We'll probably see S1, R2 today. as always, if they pivot through these numbers and you want to go to the next number, 4111's S2, and on the upside, R3 is 4178. I would suspect S1, R1, fairly quiet day is the likely scenario for as we come through from today's viewpoint, be my expectation. Let's go and let's do a weekly chart just because it's Friday, it's Monday night and we're looking to Friday. So this is the one thing, there's only one thing that I keep pointing to that's still positive. And I mentioned this last week that it looks like we have at least beyond this week into the third week of May that we should see a continuation of acceleration. So meaning that we're likely to continue to climb around this 10-week moving average. Right now that's at 41.15 and it's rising ever so slightly. So all of a sudden in 2 weeks from now it'll be 41.50. So there's some support under this market, and then it looks like PPMs are starting to predict maybe some type of peak for the month of May as we come into the last week or so, and that will be most of the expectations here is probably as we come into the end of the month that maybe we have a little downside pressure. Like I said, man, you got a coin it, just flip it. You're going to be about as good as anyone. But this bias, this slope that I was saying, this goes along with what I was saying on the database. It ties together with everything I'm telling you. As the database is positive, you got 61% intermediate symbols long. So you've got the majority of symbols actually trending, and then you have this slow slope on a weekly. Those intermediate signals are based on weekly charts. So that all lines up with the intermediate database and what's going on with the, as far as the moving averages and the weekly charts. All right, we'll go top down here on the NASDAQ. This is, boy, all I can tell you is, I mentioned this the other night, everything that, if you watch CNBC, you pick your show, or you can go to anything you want. And I just want to tell you something here real quick, is everybody told you the tech earnings are going to be off, there was going to be terrible, there's going to be these decline in earnings and earnings compression, margin compression, on and on and on, and you're still hearing that story. You're still hearing this from so-called smart people that are telling you about the coming contraction in credit and all that stuff. It just, there may be a contraction, but the fact that, and I made this comment before, the fact that it's contracting doesn't mean that there's a recession and it's going to be the end of everything. For whatever reason, this whole economy is just rotating. It's very robust. And I mentioned this side mention here is that really, if you start to look at what's going on in Europe and Asia, there's a rotation going on. So the world is still very connected. We have not done deglobalization. Everything's still connected just like it was. There's little fragmentation. I remember I was even keyed up on this whole idea of deglobalizing, onshoring, all that stuff. It's still a thing, but boy, that's a thing for maybe 5-10 years. It's going to be a very slow process, and it's very hard. Why should I rebuild a manufacturing facility here in the U.S. when I can just call up China and get it for less and not have to do anything? We'll start an affiliate store. Everything's an affiliate store, or where you have, just where you're drop shipping everything. I had bought a treadmill recently, and this company is fairly big that does this, but they're just drop shipping products. I looked at all the stuff they offer. They're just hooking up with China, and they're private labeling, and they're drop shipping everything. So that's going to be a hard thing to reverse, especially if it's easy to make money doing it. That's always the hard part, I think, is trying to convince somebody to make money the hard way when there's an easy way. And so the economies and just markets and money always seek the easy way, I think. They're looking for that easy margins and without the minimal effort. We'll see if onshoring happens. A couple of things. I'm a little mini rant here because what really has happened, in my opinion, is we saw, remember the infrastructure story in 21? That was a big deal, and they're pumping trillions of dollars. I guess maybe if you drive around, there's a major project going on between here and Phoenix, where I'm at, and they're blasting mountains. They're doing all kinds of stuff to widen I-17. It seems like an awful big effort. I'm not sure what they got planned, but there are some things going on, and there's some money flowing around, but it doesn't appear to be material and everywhere. You know, I can tell you, I was just in Singapore, I was in Dubai, and last year, last year, and all I can tell you is all that stuff is way different. There's a lot of activity going on in a lot of these economies, and it doesn't look that way here. Everything still in the U.S. is still old, still broken, and easy to outsource it. And that's the end of that little riff there. But as we get back into NASDAQ, this is the thing, and this is why I bring this up, is that what we're really seeing here is this. Look at the angle of attack here on this screen. Let's just take a look here. It's just climbing this angle. That's an awesome trend, by the way. It actually doesn't get much better. PPM 1.08. This is weekly. So this is an intermediate trend, very robust. 0.25 is a trend. We're at 1 point, whole number, 1 point. So 4 times plus the trend level. PPM 2 is at 0.88. PPM 3 is at 0.17. But all this stuff is starting to accelerate. So when I talk about the S&P, there's minimal downside. This is why this trend is very alive and very real. And just real quick, we'll cover the weekly targets on the upside here. Is really what we're looking at is you've got 3 upward targets, 14,005, 14,844, and 15,360. I'm just rounding off some numbers. That's where these dots, these are the fib targets on the upside. If you recall, when we were back over here, we had some fib targets. We basically have reached, satisfied most of them. They're 13,302. What's the high end here? 13,202. So we're pretty close to satisfying this old fib target, but now we have new targets, the min right here at 14. So all of a sudden we keep getting these higher layered numbers. And I guess come back on screen here for a minute, because I just feel like the NASDAQ and the tech sector is driving everything right now. I've been talking forever, and you folks may be tired of hearing it. There are some opportunities that's shown up in the Russell and the mid cap, but this is still the driver. I mean, we're right back into the FANG market that we saw before. You know, there's maybe a few different leaders in that pack, but the point is that you look at this chart and you can't come up with anything. The only thing that I will argue, and that there is a test of something coming, is if we look at the algos here. Let me go full screen so you can see them. Is if you look at the algos here, let me draw in a couple of things just to bring this in. So this is your risk, but because of, I'll explain everything here in just a second here, is your risk is right here. PPM 1 is trying to peak out, but even if it comes down here, it's still in trend mode. If it breaks down, PPM 2 is kind of, I'm drawing in where the values are. It's showing a rollover 2 or 3 weeks out, but the rollover isn't necessarily a sell signal. It's just saying that we're not as robust as we were before. We've lost some upward momentum, but there's plenty to maintain these angle of attacks and these upward trends. And then, of course, down here, PPM3 is actually about to turn up and see acceleration. So I'll draw this in because this is important, especially those of you who have the indicators. What you'll see here, this is the cyan line. You can see it starting to roll up here. And that's what this indicator down here is telling us, is that it's starting to accelerate. So now you've got the full trend. You'll ultimately have all three of these moving averages and angle of attack in place. The trend mode will be in place. And I guess the point of all of this is that there's no downtrend. It's not going to happen. So I know everybody's telling me about rug pulls and all kinds of stuff. I guess when I do these streams like this, you just look at what's going on in the configuration as we walk through these different markets, primarily the S&P and the NASDAQ. NASDAQ just continues to be the leader on this trend, and still has a lot of very robust numbers out there to watch for. So just know the simple 10 right now is the number 13,169. That's support. So if you see any dips down there, we should probably hold those levels. So I'm still on a weekly chart. I'm going to go to daily here in just a minute. But this is important because what's happening, even though the peak is this week, I've been talking about this 2 or 3 weeks now, is that this is the peak of momentum. As momentum starts to roll down a little bit, there's still enough momentum on the upside to keep these moving averages valid and these trends valid. So you're not going to see some kind of rug pull unless there's something going on that would be a real black swan, not something that anybody's talking about. It's not going to be the debt ceiling. It's not going to be anything that's obvious, right? And this was my argument, if you remember, even going way back into October of last year, is this stuff is so obvious it can't be right. And so far it hasn't been right. And the narrative continues to get pushed down. This is my point of the I guess mainstream financial media keeps pushing this thing. It's I don't know. It's not a conspiracy theory, but it's almost like, let's see how many people we can make wrong, or just maybe all these people actually believe the stuff that comes out of their mouth. You know, I'm just reading trends. I'm a technician and a quant. That's where, and as you folks know, I do reverse fundamentals. So if I'm getting this kind of look in this market, you know, what fundamentally could possibly happen to get that to move? And it's just more of the same on the NASDAQ. So let's take a look at the daily and just try to close out here. So daily is seeing a similar situation, not as robust, but we're look at the right now. PPM1 is only 0.05, so a little vulnerability to the downside. PPM2, 0.07. So that is not very robust. I'm going to flat back to the weekly because I need a number here real quick. So the number is 13,169. I just did not remember that number. So let me go back here. So right now, if we look at the 10 period, 13,289, 13,201, and then 13,122. So what that's telling us, there is risk down to the 40 on this. And you can see that if I make maybe this top indicator here, PPM1, is actually showing, let's see how many days, 2-3 days of upward acceleration is possible here. So you can see the slope of the white dotted line, which is the predicted SMA, that everything's in line with higher prices. So I think I sunk my putt about 14 times. So let's try. Yeah, so yeah, good luck. I see somebody saying I'm still short. Okay. All right. I mean, if you're short, you could be long and short. The market's going sideways. So sooner or later, we'll find out who wins, right? All right, so we'll take a look at the Russell, more sideways, some upward bias, not much, just sideways, sideways. Very similar to what I was talking about in some of these other markets where we have up and down projections. And folks that have been in a live room and other places have talked to me about this. What is the prediction when you have an upward fib target and a downward, and you actually go with the PPMs that give you a little bit of bias? But here we're looking at flat. Look at this. PPM 1 is negative 0.18, not quite at trend mode. It looks like it's trying to turn up the next couple sessions. We might get to slightly positive. So it's really just sideways chop. Look at the market grid, use the market grid as a basis for trading. And, you know, the real deal here is, and I'm going to finish up pretty quick with the Russell. The real deal is here. You need to be finding individual stocks that are working this sector, trying to trade this index. You can see we've been in the same range. I'm just going to come back here real quick and take a look at this. But I'm just going back here. We were at close 1762. We're at 1744, and this was back in March of earlier in March. So this is the daily. So we've been sideways for 2 months plus, and we'll see what breaks out. So the point, I guess, is that this is a tough place to play, and NASDAQ still is the king. So here we go on the 10-year. 10-year came all the way down, almost got to that fib target, and then bounced back into the moving averages. I'm going to blow this up just so we can get a pretty good feel for this pattern here. I just want to be able to look at these current bars here, and you can see where we are just sideways here, upper end of the range around 360, rounding numbers 364. Downside here, we printed down to 340. Look at 25 bips here. Look at the algos here blown up. Nothing there either. This is the daily. Let's go to weekly just to take a look at things. Weekly, however, is starting, not this week, but this is kind of there's being projected a large upside. And I'll just come up on screen because I think one of the things I'm telling you right now, I'm saying the Fed does another quarter point in June. Okay, I'm sticking with that. I don't think they're done. I think they want to see 5.5 plus, and it's going to be interesting to see how this plays out. But this chart that I'm showing you right now is actually projecting. Now this is the 10-year, right? So this is weekly. So this would take multiple weeks for us to achieve these numbers, but they are 401, 430, 450. The high end that we got, if we go back to February, was right at 409. Okay, so the fib target 1 is a retest of the 409 highs. We break above that, then we've got a whole new uptrend in rates. And my thoughts on this is that could be the case. I've been talking about this for a while, that rates are going, that across the spectrum, there's really no reason at the moment to do a yield curve, but I expect that all the rates are going to start to, the back end will start to climb again. And I still have that viewpoint, and there's no reason. I think what we just saw in this 3 handle, 330, 325, those are extreme low rates in this pattern. We're probably 4.25 is probably max. So you're looking at 3/4, 4.25, and depending on what the weather looks like on any given day is how these rates are going to look. Is it going to be about the ceiling, the debt ceiling? I don't think so. But it just looks to me that there's definitely some things going on here. And maybe they'll follow Trump's lead, whether he's being sarcastic or not, saying that we just need to default. And his perspective is that we ultimately are going to default anyway. So we might as well do it now and just come up with some spending cuts, austerity, and all that. And that would be an interesting place to go here. And one thing for sure, I'm going to stick with all my guns here on these rates, is that we're not going to see a Fed pivot. They're not going to drop rates, folks. They're not doing it, and they're going to. I'm convinced that they want to see rates normalize in the spectrum. So right now, the inversion everybody's been talking about, that's 100% accurate, we got a recession going, they're wrong. It's not 100% accurate. There's been plenty of instances, especially when you're coming out of this artificial environment that we were in for 12, 14 years, where rates were at 0.25% when they should have been 4% then. So based on, interest rates are a measure of risk in a trade, right? So if I'm going to lend money to you or to some entity, I need to evaluate, I need to get paid on a relative basis. The other thing that's happened is savers have not been paid forever. Now you can go get, maybe a direct account deposit, go to a bank, get a money market, you can get 4.5%, 5%. Why wouldn't you do that? Of course you're going to do that. Everybody's doing it. And because they're doing that, does that mean the banking system's going to collapse? No, the banks are going to have to give up earnings. They're going to have to raise how they attract deposits. That's all there is to it. So we didn't touch on this. As we go through the week, maybe I'll touch on KRE and some of the regional banks and all that stuff. I don't want to get too deep because there's a big rant here. I can tell if I go too much deeper. But the point is that we should see all of these yields start to flatten out so that the back end of the curve will start to come up, and the front end, the very front end, will start to rise again. And this whole idea that everybody's buying treasuries because they won't default any others. And there's not going to be a default. There might be where there's a period of time where maybe some of the bills don't get paid. There's a whole lot of tricks they can do. And I've been through this. Anybody that's been around for a while has been through this little party already. So we've seen all of it. And so, remember the sequester, and there's been so many events. There needs to be like a 2-hour video just on events around the debt ceiling going back. So just know that it'll get worked out. Maybe there's some drama, but these charts are projecting, at least, like I said, just to bring up those numbers again, 401, the peak probably be around this 410, 430 would be monster. And that would have that effect of flattening out. Let's take a quick look at the 2-year here, and just so we can get a feeling. A 2-year is kind of flat overnight right now, so we're looking at, it's still looking like this is the weekly. So I'm just going on weekly here, and the patterns that are happening has a similar upward target pattern here. And we did get, I'm just going to bring this up, we've got these fib targets to the downside here that just came out of today's opening. And they're looking at ridiculous numbers, 270, 217, 180. Not a chance. I was just telling you, when you see these type of objectives, what are the PPMs telling you? And this is weekly PPMs are telling us that we're going to see an increase. So as we look at on the 2-year, we're right at the moving averages. I think there's a ton of resistance around here, around 40. Let me just get the right numbers here. 419, 423, right in this upper band. And then we also look at, if we looked at the market grid, you're looking at this is weak. 408 is R1, R2, 417, R3, 427, all the way up to 436. And this first fib target on the upside here is 406. So that's what's being targeted at the moment. I don't think that these downward objectives are very realistic, especially with momentum starting to turn around. So next we'll cover crude oil. Crude oil is interesting. We're coming back toward this 200 period. We got a little reversal, still we're negative, and now we're just drifting the last couple weeks. I've said, but you can see the momentum is starting to increase a little bit. Downward momentum, though, on the 10 is substantial. 76, we'll just call it $76, is an absolute extreme in this pattern. I don't see us getting above that, at least in the short term. And so I'm going to use the 200 as a 60, we'll call it 67, with a 10 period 74, 76 on the upside. Looks like we should stabilize in this range. Doesn't look like we're going to get an acceleration to the downside. All right, so looking at gold next. Gold is coming into that window I've been talking about for multiple weeks, where we've been in this sideways choppy range. We're coming into the 10-period moving average on a weekly basis, which right now is at the 203.80 level. The low today, 211. So 2011. So look at this to possibly come down. I still think there's a really better than even chance that we could get down into the mid 1900 level and go down at least to that level. And right now, if we just look at the market grid for this week, this is a weekly chart. We're looking at the S105 even 2005, S2 1998, all the way down. STX is way down at 1950. I don't see us getting through there, but the PPMs are suggesting, and you can see the downward slope of this dotted white line, which is the predictive SMA. It's predicting that's going to go down. The only way that goes down is if the gold's trading below the value of that 10. It's going to have to pull that down, because if you look back 10 bars, you can see right around this range, around 1995, you got to get below that level to actually pull these moving averages down, especially the 10 here. So everything looks like it wants to come in. No big excitement there. And if I'm right in looking at what I'm just talking about on the interest rates, everything coming up, probably see a little bit in the Dow. You're probably going to see interest rates come up and gold come back in a little bit. It doesn't look disastrous, but it does look like we could get into 1950, 1930 levels. All right, finally, we'll take a look at Bitcoin. Bitcoin's continuing to move down. It's almost to this 200-period moving average. That's been a discussion in play. We got through the 10, and now we're seeing the 10 is actually suggesting, you can see the slope here, the dotted white line, which is the predictive SMA. That's showing you that we're probably going to stay under those values. That's roughly around 28.2. Just rough numbers, and it looks like we're starting to come down. The positive in this pattern is that PPM 2 is at a plus 2.02. This is a weekly chart, 2.02, which tells you that there's less than a 10% probability if we reach down into this 24/7, somewhere around 25,000, that's going to hold this market. The other thing is we've got PPM, the PPM 200 has got a decent upslope, and the 200-period moving average right now is 26,194. So call it 26.2, and so we're just above that, we're trading right now 27,183. So just expect that that's going to be your key number. Resistance overhead at the moment is going to be 28.2 to 28.5 on the upside. Okay, folks, that'll do it. I think that was a pretty decent stream, whole hour as always Sunday night. So thanks for hanging out. Like I said, I'm not sure what kind of week we have. It doesn't look like anything exciting. As soon as you say that there's something exciting, there's going to have to be some surprises that's not obvious to come out. And like I said, everything I covered tonight, the debt ceiling's there. That's obvious. Everything, the earnings are obvious. The reports that are coming out are pretty mundane. You got some retail, some housing numbers. I don't see where the stimulus comes from. The only stimulus we could get is that more buyers and sellers show up in a big way, and maybe there's some trigger. And maybe it's not here from the U.S. Maybe there's something overseas that happens, but I don't know what those things are either. But I would just tell you that I think I laid out this week pretty good. We'll see how we step through it. Just at the end, I just want to remind you there could be a disruption again at the end of the week, depending on how things go, because we're rebuilding the studio here. And if you hear an echo, that's because all of the soundproofing is gone in here. I hear an echo, so I suspect you might be getting a little bit. So thanks for tolerating some of the changes, and there's some really cool stuff, and hopefully we'll be in a whole new environment we come in a week from now. So thanks again for watching. Make sure you hit the like button. Make sure you subscribe. And I'll just tell you that there is something going on with this channel, as we went from 32.8 to 33.8, and now it's still at this, right at this 800 number. So subscribe. Let's see if we can break it out, and we'll just keep inching it up ever so slowly. Thanks again, everyone. We'll see you tomorrow night, same time. Have a good day trading.